Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil markets. I'll start with Paris rapeseed. Okay, as I said 2 weeks ago here, two things to note. I've mentioned before, if we set aside the island bottom in June, then we have an ascending triangle formed from March to mid-August, of which we've seen a breakout over the upper trend line, currently at 568.25, and that was 5 weeks ago. This has a provisional target X in the 617.5 area, which you can see peeking out off the top of my daily chart there. The second pattern is to look at the action since April, this time exclusive again of the island bottom as a possible bull channel. This pattern has a provisional target X1 in the 614.75 area. That is what I left you with last time. Now since then prices have continued their move higher, initially utilizing the upper trend line as an attractor, but then by the process of holding near the attractor creating a new additional smaller pattern to the mix, a mid-August to date ascending wedge pattern, which I florally described last time, and I quote, peeking up like the head and neck of a chicken out of the main bodies previously mentioned, end of quote. Anyway, I've not the market topside target for this new pattern. I don't have that yet, for the very good reason that it has already been achieved, and that's in the 593 area. However, I did give an idea of the size of the move last time once the trend line had been broken, so I hope you worked that one out on your own. So overall at this time we have two large patterns, both currently bullish, as the island bottom dealt a severe blow to any bearish incentive. It leaves me wondering which will run supreme over the other. Winnipeg canola. As I had previously mentioned a few times now, the old ascending expanding wedge pattern formed over June and July had run straight into another pattern or patterns, rather than try for its own target below. To complicate things further, there are now two possible patterns still in the offing. A possible descending triangle from early July, and a possible sideways triangle also from July. The upper trend line for both is the same, the May to date downtrend, currently at 881.70. However, for the descending triangle we have a base on the congestion between 819 to 819.40, whilst the sideways triangle has, or should I say had, an uptrend breached 2 weeks ago, currently at 877.60. However, this breach has not really been that effective, as prices have continued more or less sideways, though they have managed most recently to coagulate below the rising short medium moving average, currently at 871.80. They nevertheless have had a hard time trying to push down below the 840 even level. Yet, despite this, I'm able to give some levels on the downside for this pattern, especially as we will reach the apex of the sideways triangle at the end of this week. Okay, so an initial target on the downside would be in the 802.25 area, and a secondary target, that's target X, and the secondary target X1 would be in the 720 area. I can fully understand if target X1 would be a little bit too much of a stretch. However, on the way down to either target, we have what may be a formidable support. It's in the form initially of the flatlining medium moving average, currently at 829. It'd also be below the flat trend line of the descending triangle, thus likely prompting that pattern into action as well. The one caveat I would express in all of this is that as we are so advanced along the sideways triangle, we may still have a high chance that this move lower may be a false break. Bursa Malaysia palm oil, crude palm oil. First off, please try and ignore the color changes on the labels on the daily chart. There is no special significance to them. It is just my charting system playing silly buggers again. Anyway, I said last time that we hadn't done much here since the break out of the bull channel back in late July, mainly moving in between the 4300 and 4650 levels. Well, that is no longer strictly accurate, as early this week we had a gapping lower move down through the short medium moving average, currently at 4369, the medium moving average currently 4211, but stopping short of testing down to the support seen in the congestion zone between 4010 and 3953, within which we have the rising long moving average currently at 4006. This stop last Monday and reversal back up with a gap has possibly set the stage for the start of another move, a move I had intimated weeks beforehand. You see, with the rise this week, if we can call tomorrow a move up over last week's high at 45, if we can actually have a move up over tomorrow over last week's high at 45.82, which isn't that much of an ask, and then tomorrow also close over 44.13 as well, then we would have a weekly key reversal up. Now, additionally to this, if we were to move up between now and the end of the month on Thursday the 30th of September, over 46.70, which is possible, and then close on the 30th over 45.47, again possible, then we would have ourselves a monthly key reversal up. Now, why are these important other than their own standout positions? Well, it is because last time I laid out a scenario for a potentially very, very large bullish pattern. It is to look at the whole of the May to day action, including the last sideways weeks, as an extended V bottom. Now, this pattern is not that common, but it does seem to have some heavy merit at this time. And by heavy, I mean some really heavy merit. Yet this proposed pattern leaves a question mark and a possibility as well. The question mark is this: the action since the breakout of the bull channel is still somewhat amorphous. Despite the possibilities of weekly and monthly key reversals up, the action lacks a distinct shape or specific form. Hence, it is hard at this time to give an idea of direction or really of size, other than to look at the action since the low July up to the high in August as the size of the potential move. That may happen, thus it could be quite large. It could also be a simple bull flag stroke bullish halfway hesitation. However, if it is the larger extended V pattern, then it will have the backing of not just the June action, but all the action since May. That's quite a lot, quite a lot. What we all now need to look out for is to see what develops with the potential weekly and even monthly key reversals up. Two final things to add. Firstly, the bullish Andrews pitchfork for the 2021 action, and especially the middle time, currently at 47.50, still seem to be the main bullish incentive here. My drawing of the bullish Andrews pitchfork so many weeks ago had been a bit of speculation on my part, but it is still maintaining its validity and prominent bullishness. Secondly, and I suppose finally, I'd previously spoken at length about the bow tie formation made up from three of the moving averages. That's the short moving average, currently at 44.32, the short medium moving average, currently 43.69, and the medium moving average, currently 42.11. They were, as I previously mentioned, in the wrong order going in for either bullish or bearish bow tie, but we nevertheless did have a crossover. In this case, the crossover happened on the 23rd of July. However, between the 30th and 19th of August, we should have seen the result of this crossover. Yet we haven't seen anything. So I would ask you to treat the following with a little pinch of salt. You see, we had a golden cross, a good looking one, of the short medium moving average over the medium moving average 3 weeks ago. This is perhaps a small but significant feature that may make a difference going forward. However, please note, golden and dead crosses are lagging indicators, so please continue to be wary just in case. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.